Hey everyone, it's Tony here. I have some news that honestly made my stomach drop when I heard it. The Federal Reserve just announced they're turning the money printers back on December 12th, and they're starting with $40 billion a month. Yes, you heard that right, $40 billion. Now, they're not calling it money printing or even quantitative easing anymore. They've rebranded it as reserve management purchases. Sounds nicer, doesn't it? Sounds responsible. But I'm going to tell you exactly what this means for your grocery bill, your rent, and why the Federal Reserve Chair just said they're committed to getting inflation down to 2% while simultaneously doing things that could push prices even higher. I know economic news can sound boring and complicated, but this directly affects whether you can afford to put gas in your car next month or if you're going to have to skip buying fresh vegetables again because everything's too expensive. So stick with me. I'm going to break this down in plain English. Let me tell you why I'm even talking about this. I've been covering money issues and government assistance programs for families like ours for years now. I've been broke, like really broke. I've had $17 in my bank account wondering how I was going to feed my kids that week. I've lived through periods when inflation ate up every dollar I managed to save. So when I see the Federal Reserve make announcements that are going to impact regular people but use language that's designed to sound harmless, I feel like somebody needs to translate what's actually happening. Because they're not thinking about us when they make these decisions. Okay, so here's what went down. The Federal Reserve had their meeting today, and they announced two major things. First, they cut interest rates by 0.25%. The federal funds rate dropped from 4.5% down to 3.75%. Second, they announced they're going to start buying $40 billion worth of Treasury bills every single month, starting December 12th. Now, the official statement says they're doing this to maintain an ample supply of reserves on an ongoing basis. That's Fed speak for pumping money into the financial system. And here's what concerns me. There's no end date. They're not saying we'll do this for 3 months and then stop. It's open-ended. The New York Fed published the details today, and it's right there in black and white. $40 billion in Treasury bill purchases starting December 12th. That's not a small amount. That's a massive injection of money into the system. So who does this actually affect? All of us, but especially people who are already struggling with high prices. When the Federal Reserve pumps billions of dollars into the financial system, it doesn't just magically fix the economy. What it does is increase the amount of money circulating, and when there's more money chasing the same amount of goods and services, prices go up. That's inflation, in its simplest form. If you're living paycheck to paycheck right now, this matters because your dollars are going to stretch even less. If you're on a fixed income, Social Security, disability, retirement, this is really bad news because your income isn't going to increase, but everything you need to buy will cost more. Families who are already choosing between paying the electric bill or buying medicine, people who are already skipping meals to make sure their kids can eat, renters who are already paying way too much. We're the ones who feel this the most. Now, the Federal Reserve Chair Jerome Powell had a press conference today where he tried to explain all this. And I want to be fair and tell you what he actually said. Someone asked why they're starting with such a large amount, $40 billion a month. Powell's answer? He said it's because of tax day. He said they want to make sure there's enough liquidity in the system for when people pay their taxes on April 15th. Because on tax day, reserves drop sharply and temporarily. He also said that they need to keep increasing reserves anyway because of what he called secular ongoing growth. Basically, as the economy grows, they need to add about $20 to $25 billion per month just to keep reserves constant relative to the size of the banking system and the economy. But here's what bothers me. Powell also said in that same press conference that the Federal Reserve is committed to getting inflation down to 2%. But how exactly are you going to get inflation down when you just cut interest rates? And you're about to inject $40 billion a month into the system. Those actions typically increase inflation, not decrease it. Let me tell you what you might actually see happen in your daily life over the next few months. First, Grocery prices that are already high, they're probably going to stay high or go even higher. When there's more money in the system, food costs tend to rise. We're talking about basics: bread, milk, eggs, meat, produce. The things you need to feed your family. Second, if you're renting, brace yourself. More money in the financial system often means property values increase, and landlords use that as justification to raise rent. I know rent is already crushing so many of you, and this could make it worse. Third, gas prices could go up. Energy costs tend to be sensitive to inflation. Your utility bills might increase. Car insurance, health insurance, basically everything that's already expensive could get more expensive. Fourth, your savings are going to be worth less in real terms. If you've been carefully putting away $50 a month, that money won't buy as much 6 months from now. It's like watching your emergency funds slowly evaporate without the number in your account actually changing. And finally, if you have credit card debt or any variable rate debt, the rate cuts might help a tiny bit. But that small benefit is likely going to be wiped out by higher prices on everything else. Now, the Federal Reserve also released their economic projections today, and I want to show you why these don't quite add up. They're now projecting that the U.S. economy will grow by 2.3% in 2025, which is actually higher than they predicted back in September, when they thought it would only grow by 1.8%. So they're expecting stronger economic growth. They're projecting unemployment will stay around 4.4%, which is close to where we are now. Basically, they're saying the labor market should stay stable. But here's the weird part. They're also projecting that inflation will be lower than they expected. So let me get this straight. You're cutting interest rates, you're printing $40 billion a month, you're expecting the economy to grow faster than you thought, but somehow inflation is going to go down. When a reporter asked Powell about this, his explanation was basically that Americans are going to be more productive next year, possibly because of AI and technology. He said if productivity is higher, you can have more economic growth without creating inflation. But honestly, that feels like a pretty optimistic assumption when you're simultaneously pumping that much money into the system. They're also projecting they'll only cut interest rates one more time in all of 2025. Just one 0.25% cut. But here's the thing. Powell's term ends in May 2025, and when the new Fed chair comes in, monetary policy could look very different. Okay, I don't want this to be completely doom and gloom, so let me give you some silver linings. First, the interest rate cuts do mean that if you have any loans, mortgage, car loan, student loans, your interest costs might go down slightly. It's not a huge benefit, but it's something. Second, if you're in debt, inflation actually helps you in a weird way, because you're paying back that debt with dollars that are worth less than when you borrowed them. Again, not a huge consolation when everything costs more, but it's worth noting. Third, the Fed is doing this specifically to try to keep the labor market stable and prevent layoffs. They want to avoid a recession. So while inflation is painful, widespread unemployment would be devastating for families. They're trying to avoid that worst scenario. And fourth, wage growth might increase if employers have to compete for workers in this environment. It won't happen overnight, and it won't happen for everyone, but it's possible that some of you might see raises that help offset rising costs. So what can you actually do about this? Because I don't just want to worry you. I want to give you action steps. First, if you have any room in your budget at all, stock up on non-perishables now. Rice, beans, pasta, canned goods, flour, things that last. Buy them when they're on sale before prices go up more. Even buying an extra $20 worth of staples, each grocery trip can build up a buffer. Second, look for ways to increase income. I know that's easier said than done, but even a side gig bringing in an extra $200 a month could help. We have videos on realistic side hustles. I'll link them in the description. Third, if you qualify for any government assistance, SNAP, WIC, housing assistance, energy assistance, use it. There is zero shame in needing help, especially when the economic system is literally working against regular people. Check your eligibility for every program available in your state. Fourth, delay major purchases if you possibly can. If you were thinking about buying a car, moving, making any big financial decision, you might want to wait a few months and see how this plays out. And fifth, focus on keeping your job secure if you can. The Fed says they're trying to prevent layoffs, but economic uncertainty always creates risk. Make yourself as valuable as possible at work. Look, I want to be completely honest with you about something. The Federal Reserve is not thinking about us when they make these decisions. They're thinking about banks, about Wall Street, about big-picture economic indicators. They're worried about liquidity in the financial system. They're worried about preventing a banking crisis. But we're the ones who live with the consequences. We're the ones who have to figure out how to afford groceries when prices jump 20%. We're the ones who have to choose between medications and rent. We're the ones lying awake at night doing math in our heads, trying to figure out how to make it to the next paycheck. And that's frustrating because Powell can stand up at a press conference and say they're committed to 2% inflation, while simultaneously doing things that could push inflation higher, and there's nothing we can do to stop it. But here's what I also know about us. We're survivors. If you're watching this channel, you've probably already been through hard times. You've figured out how to make $30 stretch for a week's worth of groceries. You've kept the lights on when it seemed impossible. You've done hard things. This is just one more challenge, and we're going to get through it together. I'm going to keep watching the situation closely and updating you as things develop. If the Fed makes any other major moves, if inflation spikes, if there are new assistance programs announced, you'll hear about it here first. If this video helped you understand what's really going on with the Federal Reserve and what it means for your wallet, please hit that subscribe button. I post videos every week about money, government programs, and navigating financial stress as a regular person. Having you here in this community, honestly, makes this whole thing easier. Check the description for links to my other videos about cutting expenses, finding assistance programs, and making extra income. There are tools and resources that can help you through this. And remember, you're not alone in this. Millions of us are dealing with the same struggles, and there's no shame in doing whatever you need to do to take care of yourself and your family. I'll see you in the next video. Take care of yourselves out there.